Hey everybody, Boris speaking for us. Welcome to the Weekly Technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar for March 18th to March 22nd, 2019. And the story in the calm dollar land is essentially the same story that we saw in the majors, but maybe in even a more pronounced way, with Aussie and Kiwi really closing relatively decently at the end of the week. A lot of it due to the fact that the murmurs from the U.S.-Chinese trade talks have become positive, even though the actual summit between Xi and Trump was moved away from March. They seem to have been a little bit more progress. Clearly, I think both parties very eager to make a deal. Xi needs to make a deal in order to essentially truncate the very, very severe economic tensions that the exporters are having in China right now. And Trump needs to make a deal in order to look good politically after getting knocked around a couple of times, especially with North Korea. So it's I think both parties are very motivated, which means the possibility of some sort of a face-saving trade deal should be relatively good. That, of course, is positive for Aussie, positive for Kiwi, positive for risk, and the market was reacting very much in that manner. So the levels and the ranges are very tight, I think, in all of the calm dollars, with dollar CAD being the one exception for a variety of reasons. So Aussie dollar really in this very tight 70-71 range, and we're very close to breaking out that 71 range. My argument will be that if we can close above the 71s, that will be the proper signal for a further continuation to the long side. Dollar CAD is its own story. We'll address that in a minute. Kiwi, very much kind of a mini version of Aussie in a sense that we've made a double bottom. It looks relatively well. We're trading above the 20 SMA, and it's looking like it wants to take the 69 to the upside. Now, the data next week out of the calm dollar land has some important data. We do have, of course, the New Zealand PMI data. Now, what's interesting is that one of the reasons why I think actually the commodity dollars started to perform a little bit better is because the earlier PMI data that came out on Friday out of New Zealand showed an improvement. And this is with the manufacturing data. So the idea here is that maybe the worst is over for Asia, that there are some green shoots going on. It's not a situation where the market is bullish growth there, but it's just sort of bullish the fact that there's no recession there, that it kind of may be able to avert and create a soft landing. And it's really the soft landing trade that you're seeing in the risk pairs right now all across the board. Now into, I think, Wednesday, post FOMC as always, we have the Kiwi GDP data. Here we're bullish the GDP with retail sales being up strongly, and that should be, again, another positive for the Kiwi into the midweek. And we're mildly bullish the Australian employment data because employment was up sharply according to services, and that is actually a very, very good tell because the services is the largest part of the employment data. And all of that, I think, is actually kind of a good tell because, remember, the negative story on Aussie is that RBA is going to cut. But if labor remains relatively strong, if full-time employment stays at these levels, and if participation rate, most importantly, stays at the very high 65, 70, maybe even improves, all of that provides very little reason for RBA to cut rates right now, especially if China stabilizes. So that puts a bit into Aussie and maybe puts another run at the 72 handle as we go forward. Into the end of the week, we do have one final calm dollar event, which is important, which is the Friday's Canadian retail sales data and the CPI data. Now, the reason that is important is because Canada has actually been the weakest link amongst the calm dollar land, even though oil has been up. The issue here is that we've had some disturbingly weak Canadian data on the housing front. The Canadian housing market is really starting to roll over at this point. The BOC, while making noises about maintaining its sort of neutral posture, is clearly in no mood and no shape to be able to raise rates. And you have this brewing political scandal with Justin Trudeau, which he may survive, probably will likely survive, but the question is going to be enough to dent him and dent the Liberals to a level where he may be vulnerable in elections. So there's just a lot of mildly negative swirls around Canada, which is why dollar Canada has underperformed both Australia and New Zealand into this week. And while it looks really vulnerable to potentially a breakout to the upside at 134. So let's take a look at the charts here and just see how everything shapes up. So here's Aussie. And Aussie, as you can see, clearly made that double bottom at the 70. And now, for it to have a fully positive impulse, we need to close above the 20 SMA, which at this point is obviously 71. That's why the 71 on a daily close is the proper signal to think that we have a reasonable chance here then to maybe make a run off the 72. That would be consistent with a pro-risk, pro-soft landing in China, positive trade deal story, and we'll see if that has enough legs here into next week to continue. Kiwi, same story, and Kiwi, by the way, looking better because it is actually able to recapture the SMA and kind of hold around it. It's still obviously holding the 68 handle and has a much stronger chance here on any kind of positive move to move towards the 69s. Of course, the terrible tragedy that happened on Friday did not have actually any impact on FX trade because it was really a political story, not an economic one. I don't think it will have any ramifications as well. Fortunately, let's just pray that there is no further terror and damage anywhere in the region. But as far as the macroeconomic story, doesn't seem to be having any issues. And as I said, the general tone as far as the data set this week should be positive New Zealand, and that could provide us with a boost towards the 69 to the upside. Last but not least is the dollar CAD story, which is far less bullish to the Canadian side. You can see the Canada, we couldn't even clear below the SMA. We couldn't break the 132s to the downside, and we'll see oil quite supportive. I mean, we're at 58. It's not like we're falling off. And of course, if oil manages to squeeze itself up towards 60, that should provide us that breakdown to the below the 3250s as a support level. Overall, it's very hard to read this chart. You sort of look at this chart and it's kind of neutral to possibly even bullish because we're holding the SMA. Yes, we did make a lower high on this move to 34s, but the retrace so far has been relatively shallow. And if we move back towards the 34s, that would suggest actually a series of higher lows and potentially a breakout above the 34-35 level, which then puts us square up towards the 36s. So Canada looks most vulnerable, I think, on the COM dollar front right now. It doesn't have a lot of data, so we'll see how it trades out over the front of the week. But for now, it's really the Aussie and the Kiwi trade front of the week that's going to determine how the risk flows go. Wish you guys the best luck, the best trading. Boris, over and out.